Welcome back. You're still watching Market Sense right here on ET Now. Let's address earnings with Cosmo Films. Neeraj Jain, who is the CFO of Cosmo Films, joins us on the show. Neeraj, it's been a weak set of numbers this time around. Tell us about the kind of growth you've seen in volumes and what has led to the degrowth in the top line, whether that will continue.
Well, good afternoon and thank you for your question. If we see overall basis, PAT is 12% growth on a quarter-to-quarter basis, and there is 2% growth on year-to-year basis. In this quarter, actually, there is about 250 basis point reduction in the margins, largely on the commodity films, which we believe now has bottomed out. But important thing is, company has been able to successfully compensate this with the lot of specialty film sale. We have grown more than 10% in specialty film sale in the quarter, and by improving the lot of internal efficiencies. So we have been able to beat in the quarter largely the cyclicality aspect which used to be there in this industry. So I would say the numbers are not that weak. I mean, it's more that the company is getting more stronger by improving the specialty product portfolio, and that shall continue to be our focus area.
Okay. What's the outlook ahead for the next few quarters? Could this quarter's softness be made up for in quarter 3 and quarter 4?
Well, in line with our larger aspiration to become close to $1 billion company in next 5 years, we have put up the growth plan, and as we announced 1 year back, we have put up the BOPP line, which is going to be functional in the quarter 4 of the current year. So that's going to add not only top line, and of course that will add to the bottom line. Besides this, as we recently announced, we have acquired land, adjacent land near our Waluj plant, which will again, currently we are evaluating a couple of projects which get shortlisted. Then we will come out with the final growth plan. But yes, the company is looking towards the overall aspiration to become close to $1 billion company.
Okay. The other factor, you recently bought about a 34-acre land parcel in Maharashtra to aid your expansion plan as well. Take us through that progress. I know you briefly mentioned about it. When does that get commissioned, and how does that add to your top line growth going ahead?
So the line which are going to be functional, we have put up in the Gujarat. The land parcel which we bought recently in the Waluj is for the upcoming projects, which currently the company is evaluating 3-4 different projects, and that too, something in the specialty segment particularly. So once the board approves the final plans, then definitely we will come out with the more detail on this. Okay,
fair call. And so my question to you was broadly this: that with all your expansion plans over, and I believe you've allocated about 1,000 crores to the expansion plan, what would your debt equity situation look like, and what's the uptick in revenues that you envisage?
Well, very relevant question. Currently we are at close to 480 crores in that debt level, which is fairly comfortable if we look at the debt equity, which is close to 1 time, or the debt to EBITDA, which is also less than 2.5 times, close to that. So even after considering the capex plans, we look at in the long run close to 1 time of the debt equity ratio. Although in the temporary basis there may be some changes in this. So very broadly, the debt is looking to be under control.
We wish you all the best, Mr. Jain, with your future earnings. Thanks very much for joining us and giving us more clarity on how this quarter's performance panned out. Let's just change tracks. I think there is an update coming in on a possible